for something like that.
Yeah, it's unbelievable. And thank you, Phil. You should really stay tuned for the next show because Spain has just been downgraded by the S&P, so we'll see what impact that has on the markets tomorrow.
That does it for us. Thank you so much for joining us. We will be back here again tomorrow on Crazy Bell.
Fast Money is going to start in just about 8 seconds.
Ready, Black?
Yep. See you tomorrow.
Bye.
Kiss Black. Roll Alpha. Take track.
Stocks keep sliding.
There's a lot of red on the board today. You can see the Dow Jones Industrial Average now almost at the lows of the day. It's down 77 points, down 4 straight days.
As investors fear the worst from upcoming earnings.
Klaus is remarkable, okay? The idea that he has to break up the company, he really just, I think, puts it to rest in the conference call. I like him. Doesn't mean you want to own the stock.
Yeah. And the fiscal cliff looms large, but Jamie Dimon's ready for battle.
We're forming now a fiscal
20 seconds.
command center. We'll be prepared. I mean, JP Morgan will survive a fiscal cliff. And I just think it's terrible policy to allow it to get close.
Politics, earnings, we trade it all on Fast Money right
Beta.
now.
Melissa's Mike. Roll Beta. White. Cure.
Live from the NASDAQ market site in New York City's Times Square, I'm Melissa Lee. The S&P and NASDAQ drop for a 4th straight day.
White.
Should we be bracing for a spooky October, or is this just a pause as we kick off earnings season?
Ready,
And so
three.
far, we
White.
have had
Ready,
a
six.
couple of disappointments. Alcoa, for one, finishing close to the lows of the session, and that warning from Cummins
Take
seems to
six.
throw every excuse into the bag.
Come on, Mel. And then throw Chevron in for good measure. But I think it's sort of the
Pretty street cred for
sticks
guy.
with the camel, right?
Ready,
you know that
2,
whole
3.
thing?
Take 3.
Throw enough sticks, it's going to break its back.
Trade school 2. Fire.
Straws,
Yeah. Straws. Straws.
Ready, 6. Take.
They don't want to hurt the camel.
It's actually abusive in a lot of channels.
Anyway.
No, but NSC,
Ready, 2. Take. Ready,
I think it's
street cred.
finally catching
White.
up. But I'm sort of in the camp that we bounced off 1425 before. I think we're going to do it again.
Change
you know, for example, Spain comes out, raises her hand, and says, "Hey, we need help." Yes, it's 30 points higher. I'm not saying that's going to happen, but that's definitely out there. So although I'm definitely in we're in the apocalypse side of things. I mean, I do think the world is an extraordinarily scary place. I've said for quite some time, it doesn't mean the market can't rally. And I think this is actually risk-reward-wise set something pretty interesting on the long side for the market in general.
Sort of a lackluster test here of the 1430 level. So when you say that we rebounded off of it, it seems like the buyers are fading now.
White.
I don't really feel as if they have any sort of ammo behind them. Volumes have been light. They've been light forever. So I'm not really pointing to volume. I'm pointing to going to year end. There's a list of things that people are worried about.
White.
But underperforming is one of them.
Ready,
so I mean, why, if you have earnings season right now, when we've only had Alcoa, who cares? So, you know, we have the meat of the things you need to hear about. Big tech next week is what everybody's waiting on. So I almost feel like, sure, you know, the price action is somewhat without direction. The Beige Book, a couple of the other reports we got to tell you that what we know. So I don't know that we're in such a scary place. Again, technically, as Steve's saying, I mean, we had the hold we needed.
And the things that we're worried about, this list has been in existence probably since the beginning of this year. So we know these.
They never get hit by the bus that you can see. We all know about these things. You have to have some other kind of shock out there. That's why last night I was saying the one thing that this market hasn't priced in is actually improving economy. The economy, the numbers are not that great. Obviously, earnings season's not turning out that great. But in the past, the market has looked through this. So you do need to be concerned here that in the past the market has said, well, policy is going to change this. We're going to have QE. If you break through 1425, it's conceivable the market hits a pretty big air pocket.
You said this last night, that the risk is that the economy improves when nobody is expecting it. What is that risk? The risk is that you're positioned in a too defensive a way, so you don't participate in the upside.
Either you're short or you're not long enough. But everybody that I talk to is saying, listen, the economy's terrible, which it is, and they're positioned for that. Nobody's as long as they should be. Look at pension funds even. They're not even in this market as they should be.
I just think that's probably the least risk right now. So I think that's the reason why. You are pretty much priced in here. If you look at the economy improving, I think that the market has pretty much priced in that. It's also priced into the downside that Ben is still here. So I think that we're caught in this level of 1400, 14 and a quarter for a good reason. It's also the biggest IPO week since 2010. So people are stuffing a lot of paper onto the market. I'm seeing it more in emerging, but again, I'm talking about across the world. The largest week of IPO activity. So a lot of deals coming to market, and a lot of things are trading heavy because of that.
Right.
Ready
Let's
three,
move
take
on
three.
here. A survey
Options.
conducted by
Next
Investors
trade, fire.
Intelligence. This is shocking, actually, this response. Shows 29% of respondents see a correction coming. That's up 8% from just 3 weeks ago.
Ready doubles it on. Ready six, take six. Ready two, take two.
Acting like I'm
Ready
supposed to know
one,
that.
take. Ready two, take two.
Sit on a panel like this every night.
Ready six, take.
Question I'm sure people out there wondering. 10% is the
Ready
accepted.
Well, and again, after the
31,
run, I
take.
mean, what, where do you get scared?
Why is he looking off into the
really, if it comes to earnings,
I don't know. We need to zoom out on him a little bit.
He's not expensive.
Dallas, I need you to zoom out a little bit.
Earnings that we need to see and validate. On 2013, we're very cheap.
All right, so back to the topic at hand.
Ready
The
three.
question that we're asking right now.
Take three.
Joining us now is David
Good,
Tice,
good, good.
president
Ready,
of
Ars?
Tice
Ready, doubles.
Capital.
Take doubles.
You probably know him from the Prudent Bear Fund once upon a time. David, great to see you as always.
Dark Horse 9.
You're still
Nice to be
bearish.
with you guys.
You're still bearish at this point. How is your portfolio positioned at this point?
Well, my
nine.
portfolio is personal now.
Ready, street
I'm
cred,
invested in a
160.
number of hedge funds that are bearishly oriented.
White.
I own a VIX position that I've had my head handed to with that. I still own a bunch of gold stocks, and I have some
Ready,
private
nine.
equity investments that are
White.
going to be resistant to market forces.
In terms of expressing your bearishness through equities, whatever it may be, hedge funds or your own holdings, how has that been in terms of your performance for your own money this year? I mean, it's sort of been hard to be the bear.
Take.
Oh yeah, I mean I've lost some money this year in my gold stocks. Gold stocks have done horribly, but I think they're set up to do very, very well. I think they're incredibly well priced relative to the bullion right now, and I do believe that gold and silver are going to do very well in this period of extraordinary money printing. As far as the VIX position, we already talked about that. I mean, that's been a
Looks
horrible
good. Ready,
trade,
storm.
but I think
White.
the VIX could go up to 70 or 80 at some point. I'm still expecting a crisis down the road.
Ready doubles with 4.
So
White.
here's the question, though, David. At what point do you change gears? At what point do you change strides? Is it a level in the S&P? Is it news, geopolitical? What is it?
Ready Rs 9. Take. Ready Deco 3.
Well, I'm not really going to change positions here. I mean, I ran the Prudent Bear Fund from 96 to 2008. And people thought I was crazy when I was bearish back in 97, 98, 99. And I saw that a bubble was developing, and we ended up crashing 00 to 02. Then we ended up coming back because
but it does make you flip around.
But
it does make you flip around some positions, though. Even if you stay still bearish, you do have to play around with your strategies, right?
Ready Rs 9.
Yeah, and I never claimed to be a great trader like you guys on Fast Money are, for sure, and I tend to be very, very early. But I'll tell you what, this really seems like it seemed in early 08. Remember, in September 08, after Lehman went down, it wasn't until October, November that the market started crashing. So,
take doubles.
So, in other words, I believe Spain, Europe, China, all the things that we see, it's going to be recognized. The market's going to pick up on this. Policymakers are just throwing money at this. If printing money was the key to prosperity, then Latin America would be the world.
I think a lot of people fear hyperinflation, but I just finished Harry Dent's book, and he thinks that deflation is the next big bugaboo.
7888.
Have you thought about that at all? Is deflation something we should be concerned about?
I mean, that's the big struggle. I mean, I think you look at bears. The bears are still split between those thinking that we'll have a deflationary outcome and the inflationary outcome, and I respect both. I do think that there is risk that velocity does not pick up, and we end up just going through, a horrible deflation, and that's what Bernanke's worried about. That's why he's throwing everything at the system. However, velocity could pick up at some point. He's going to do everything he can to try to get some inflation going, and then maybe it does lead to hyperinflation. I wish I was that smart, but that's why I love gold, because gold does well in deflationary circumstances and also inflationary circumstances, and oftentimes that's forgotten.
All right, David, we're going to leave it there. Always good to see you. David Tice
33,
of
take
Tice
3, ready 6.
Capital. All right, let's quickly touch on this news that just crossed just before 5 o'clock. S&P downgrading Spain with an outlook of negative. So it looks like a 1-notch downgrade here. So I'm just wondering what you make of it. We are waiting for the Moody's assessment
after hours action?
and for the assessment
After
of the
hours
banks
action
to come out.
storm.
And that was the one that was widely anticipated.
I think people were actually pretty disappointed by the stress test, and also have obviously been disappointed by the amount of aid that Spain's been stepping up to ask for, which only means that they're continuing to forestall a real issue here. At some level, you almost get the sense that the market wants to see this. This puts these guys and says, guys, come on, let's get on with this. Let's take what the bad medicine is, and I almost think perversely this is something that markets will endorse.
Yeah, by the way, sorry, it's a 2-notch downgrade. I want to clarify that with the outlook negative still.
It'll be interesting to see how Spanish yields trades tomorrow, because I agree with Tim. Everybody's expecting some kind of a downgrade. Moody's will be a big one. If they downgrade, then Spain loses access to the ECB. They can certainly change the rules, which they've done in the past, and I wouldn't surprise me to do it again. But this will be key. If we get a risk-on rally because of this downgrade, you'll expect everybody expecting that Spain will ask for a handout.
That's exactly what we talked about at the top of the show. Is it possible for Spain? Spain raises a hand, and then this 14.25 level is going to hold, and I think we're up 30, 40 hands.
I just don't know how that helps global growth.
It absolutely does, and I agree with you. But the knee jerk, I think, will be.
No, I hear. I just think we priced it in already, but.
And we're nearing that 14.25 level right now in the futures trade. Something we'll be watching, of course, in the after-hour session. Meantime, Yum Brand seeing a big pop today after the company reported strong China sales are better than what had been expected. Our own Tim Seymour called the pop on Monday. Take a look.
Charlie Track, take it.
Holding Yum into the numbers after the last couple quarters
13,
is
one of the best.
a daring move. I think we priced in a lot of bad news already, but
ready 6, going to Tim here. 5 seconds, 4, 3, 2, wipe 6.
Trade update.
Trade update to 1.
Strong and long.
Fire.
Interpret that any way you want to. But at the end of the day, what are we doing now? Which is really the question about Yum. Do we remain long and strong? And I think, first of all, on the charts, 74 is where you care, where you want to break through. There's a bunch of upgrades. A couple guys up to 80 today. The keys here are really, to me, are they maintaining margins in China? Dave Novak, who I think, again, is one of the best, said 15% is where we will stay in China, even though the Chinese economy is going to be choppy. India is really their next China. So they're talking about 1,000 stores in India by 2015. And if they can pull off anything close to that, the 18 times multiple that this stock is trading at, which again is not terribly cheap, will hold. And if you want to know where investor sentiment was going into this number, it was that these guys were going to miss and that China was going to be. So there's a lot of short interest into this number, and there were people that I think were wrong. And it doesn't mean that Yum is off to the races here. Really, their U.S. numbers are what drove that performance today. And I think, in addition to the fact that China didn't disappoint. But watch India, that's really exciting.
Who knew a Dorito shell taco could have such an impact on U.S.
I know it does for guys.
32.
Doritos.
Take 2.
I've never stepped foot in it. I've told you that before. I'm a Qdoba guy, but I haven't been in a while. Maybe we should go tonight.
No, not with me.
No?
You and Tim can go.
33. Take 3. Special music.
All right, coming up next, tensions escalating between China and Japan. And what's really behind the conflict? A top Asia expert has got the facts. Plus, find out what opportunity the China-Japan tug of war could be creating for 2 of America's most iconic companies. Much more fast straight ahead.
Stand by Delta Sound.